The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy.
On this episode of Pennies Going In Raw, we talk about this week in the market, the Suez Canal, SPY just absolutely ripping towards the end of the week, and much more.
Hey, yo, check 1, 2. This is Flavor Flav in the building for the Atlas crew.
Atlas Trading, what the fuck is up?
There are traders, there are prodigies, and then there's legends.
We're up 4%, baby.
No way.
4 fucking percent.
Buy the fucking dip.
Hey, who told me about IDEX?
Like, dude, what the fuck? Like, someone just made, like, a lot more money than me on my trade.
You find out life's this game of pennies.
Did you check the portfolio?
Pennies. The margin for error is so small.
I bet Warren Buffett never did that.
And they out there making money right now off of penny stocks.
Them two guys is putting in work to make y'all rich.
The pennies we need are everywhere around us.
Time to think big.
Pennies Going In Raw.
Featuring Dan, Deity Dukes.
And Hugh Honey.
Produced by Vinny Strokes, baby.
This episode of Pennies Going In Raw is brought to you by Benzinga. Benzinga is our absolute favorite resource to trade with besides our broker. We use it for news, scanners, and chart. We use it for everything. It's the absolute best, but that's not all they have. They also have their YouTube channel, which is live streaming every single trading day with Hot Stocks Luke, and they have great guests ranging from CEOs of stocks you trade to the CEOs of the brokers you trade with to the people you follow on Twitter. Make sure to join them. That's youtube.com/Benzinga. Welcome back to another episode of Pennies Going In Raw. Today is Sunday, March the 28th. And I mean, if we're just going to continue talking like it was the last second the market was open, wow, SPY ripped at the very end of Friday. The last 30 minutes went from what, like 388 to 395?
Yeah, I mean, I thought it was ridiculous when it jumped $1 in a candle, and then all of a sudden we just saw deal. Insane.
What does that mean? I mean, why did it do that? What I mean, is there any reasoning?
Yeah, I think I tweeted about it that the market makers are just laughing at us, and I think that that's really what it comes down to. Is that we talked about that the market makers really want to show their force after what happened with like GME and other things. So I think that this was just like okay, everybody was buying puts, especially as we were getting close to that support. Everyone was like, "Oh man, at this rate, we're gonna break through that with no hesitation whatsoever." And all of a sudden, you just saw a massive green candle, and then it was like, okay. Well, at least the high of the day, will reject, and then it had a little bit of trouble with the high of the day, and then the last 10 minutes was something incredible. Last March, when I think it was like the biggest red day of that stretch, I was on the phone with my mom and I was like, remember this. This is monumental. And I think since then I've called her with the same exact thing, saying the same exact thing about 10 different topics, and Friday was one of them.
What do you think this could, going into next week, is this guaranteed 400 break now, or is it depending on what happens? I mean, obviously there is one worldwide news kind of affecting a lot of trade, being the Suez Canal being blocked. Let's say that gets cleared up right as market open on Monday. Do we see, is just the combination of catalyst we need?
Yeah, I mean, we've been in a range for a good part of the year, and I think that it won't necessarily be a catalyst. They might. So the way that everything kind of happens is that the way that I really look at it is that the market makers give catalyst opportunities to make the market do a certain whatever they really want. If that makes sense. They use a catalyst to give a reaction to the market. So they very well may use something like the Canal as, okay, the last 3 months, stimulus news, the economy getting back, vaccines, that wasn't good enough catalyst. But 300 ships being able to get through the Canal, now that makes the market hit all-time highs and break out. So I definitely could see that happening. It's really going to be that 400 break. And not only just that 400 break, we need confirmation. So we would like the 410 come back down, test the 400. And then if we hold that 400 the first time, we could really see parabolic movement inside SPY.
Okay, another thing that we always talk about is the sectors we saw from the past week and what it could be moving forward. So obviously, what we saw at the very end of this week was China EDU starting to run. What do you think was the cause behind that? And then going forward, I was surprised that the Suez Canal didn't honestly form like crazy shipper or oiler runs. And maybe I just don't know better. But, what do you think about that?
Yeah, so oil actually saw a pretty good pop because of the Canal. I don't know if anyone saw the price increase in gas, but I went to the bank and it was almost. I was talking to my bank manager, and he had to pay double for gas what he usually does, and part of that was that he was in, as he said, the better part of town, but he saw a significant increase inside his gas price due to the Canal.
If you're thinking about like the Canal, what do you think? Do you think there's any sectors that could open up after it opens up, or do you think like we just go back to business like after that?
Yeah, it's really going to depend how this plays out. If the Canal's open like Monday, then it's like business as usual. But I don't know if anyone saw the Ship tweet, but Ship tweeted kind of pretty pumpy tweet saying that they're like the only United States like shipping company, and they were trying to pump their stock. I don't think it worked very well. But that being said, if we're back here next Sunday still talking about the Canal, then we could start to see a sector forming and runners starting to really form, because people are kind of expecting that this is going to be done rather soon. And if it carries on, then it becomes a supply and demand thing.
Yeah, Suez Canal is in such a weird place for people to get stuck. On one side, you have war-torn Yemen, the civil war, and then the Saudi Arabians. Look up Yemen. They're obviously in a weird spot right now. And then on the other side of that, you have Somalia. And I've seen Captain Phillips. I know, what that means for shippers. I'm sure it's got to be like such a... I definitely want to be on the other side with, I think, Egypt and Jordan. I'm not the best cartographer, but that definitely seems to be the better side to be on for this occasion.
It's kind of funny that we haven't seen any, the ships are just sitting there. Like, they're just sitting there.
Strength in numbers. These are probably looks like a pirate's wet dream, but in reality, it's probably a bit of security there.
Like guerrilla warfare, they just crawl up the side of the ships or something, start
dumping
Captain containers.
Phillips. It's crazy, bro.
Dude.
It's a real movie.
Yeah, dude. That's crazy. God bless Captain Phillips.
Thoughts out to all the people stuck out there. That's gotta suck, and everyone missing their Amazon deliveries getting there a couple days late. I know that's super inconvenient for everyone. So thoughts and prayers for y'all.
My iPhone charger came a day late.
Damn, I'm sorry.
Damn Canal. But anyway, that being said, I really do think that it's going to depend if the Canal opens up by the early part of the week. If the Canal doesn't open up by, let's call it Friday, we're going to see, even though we're only at 320 ships right now, it's not necessarily about that. It's about the ecosystem and what it's going to do to the supply chain. And so I think this is a story that we're going to have to see play out. And we very well could be here next week saying like, oh my God, Friday, shippers ripped, oil closed at $60 a barrel. Oil's now at 78, next week, like something like that, if the canal doesn't open.
So another thing we saw this past week was, the back end of trades, as you like to say, happening 10 times faster than the ride up. You take the stairs up, the elevator down. Do you think that's because of like lower volume? Because there were a lot of halts going on this week. I think one thing we need to touch on, I know we've touched on before, but just going into halts and then just the back ends. Why do you think that was happening so much this week? Is that just lower volume in the market? Just because I saw a lot of people that seemed to struggle this week and, last week. And now you're starting to see these back end of trades just really start to pop in.
Yeah, and part of that is the low float mania nonsense. These things have a million float, 2 million float, so it doesn't take much to really get them going. Especially when you see like the China educations, when there's like kind of not a cult because nobody really like thinks that Wafu is going to be the next Zoom. But you kind of see like the second that one Chinese education moves, they all freaking halt up. And that's what you kind of see is that everybody goes directly to those names. And so with low floats plus, a sector with low floats, oh my God. I mean, this is what you see. And so the other thing is that, which is what you mentioned, is that we're seeing the backside of the trade come faster. And so if you noticed yourself getting chopped up, or you noticed kill candles happening to where, like, for instance, like Wafu had a $5 kill candle. You could have bought it, held it up $5, and within a minute be back to even, if not underneath your average. And that was something that we saw a lot of this week, especially in the later part of the week after NFTs were hot the first 2 days. And so if you're seeing that, you need to reduce your size, because right now there's kind of a little bit of like a limbo. And so you need to reduce your size, because the kill candles at $5 can really wipe you out.
What do you think about kill candles in general? And then I guess kind of maybe explain what one is.
Yeah, so it's funny that you mentioned that, because I was actually at a conversation just this morning about kill candles. And so when you see a supply zone on the chart, when I mean a supply zone, kind of like a resistance point that we're hitting, and there's just massive not accumulation, but massive amount of shares. So if you guys overlay the volume bars across the chart, you can kind of see where most of that volume is pent up. And so if it's kind of stuttering and it's having trouble getting through there,
barcoding under a resistance. Yeah,
exactly. And then all of a sudden, let's say the price is at $50 a share. And then all of a sudden, boom, one huge red candle, let's call it, takes it down to $42 a share, which, that's a pretty drastic, that's something. Yeah, that's a pretty big kill candle. And so, and obviously, it doesn't have to be that large, but for purposes, we'll use that big of a number. And so from there, that's when you really have to start saying, okay, we got to a supply zone or resistance point, and we couldn't get through there. And then all of a sudden somebody big was trying to get out. That's a time when you have to look at the volume, because there's times where it could be a $5 kill candle and it's 200,000 shares. Or it could be, which is in most cases, a $5 kill candle and it's 3 million shares. And so you have to ask yourself, okay, what's going on here? And then the next time when you see a kill candle, you want to see it come back up to the lower part of that range of the supply zone. And if it rejects that, that's a short's dream. That's a short's dream. That's almost like a beautiful short setup. So if it can't get back up through that prior support, be done with it. Even if you're coming out break even after riding the trade for 2 hours, be done with it, because somebody got out, it rejected that support, and they're probably selling. Any pop is probably to sell into it.
Okay, well, going into that with the kill candles and halts, do these kill candles a lot of time cause downward halts?
It definitely can. So it definitely can, especially on the low floats. If you have a 1 million share float.
Yeah, I've seen people like one buy halt the stock up,
Oh yeah.
So, I mean,
One buy.
I guess one sell can do it downward.
I mean, you can even do a bid. I mean, a bid can literally halt some of these low float names. And that's why, anything underneath really 10 million, honestly, if you're new, anything underneath 20 million, you need to either A, stay the freak out, or you need to reduce your size and understand that these move like insane. Like when you see, we talked about range last week, and the range on these things intraday can be massive. I mean, we're talking, Wafu hit 18 or something. Like, I mean, it can be for an $18 stock. I mean, that can have like a $9 range intraday, which is mind blowing.
Yeah. Just shows what market we're in. But with halts, how do you kind of approach them? I know like one of my biggest gains was without a halt up, halted up 700%. One of my biggest losses has been, could be a halt down. And it is tough to play, and they're either a blessing or a curse depending on which way they're going.
Yeah.
I can. Do you ever try to catch the bottoms on these when they're halting down? How do you? Do you have any halt strategy, or is that just something you avoid?
Yeah, definitely. So there's a few different halt strategies that I like to use. First off, I really try and not get myself inside a pickle. Even inside like a halt up, I don't enjoy it. I don't enjoy a halt up because it's just too much for me to handle because it doesn't make sense. I've seen halts where like it halts up, opens and and then it comes back up, and it's just not my game.
Yeah,
so,
I mean, like with PRPO, I remember it's at 160. Halts up, goes to 7. The next one, everyone thinks it's going to halt up again, goes to like 770, and then it just from there, I think it closed at like $4.50 or like $5-6.
Yeah, I mean that's crazy range, and that's not my game. I don't have that'll give me a headache that I don't want to deal with that. So
yeah, it's stressful during the 15 minutes you got.
Oh my God.
Or in that case, 3 hours.
Yeah, exactly, and that's not something I want to deal with. And so there's a few things I do. First off, risk adverse has to be your number one thing because a lot of people when you start trading, you think about how much money you can make if because there's tons of opportunities. When we talk about range, everybody thinks that there's so much money to be made, and there is, but there's so much money to be lost. If you just held that position, I mean, you said it closed at what, 450?
Yeah, so like I would have only made 150% instead of the 700%. But for the people that bought it, that's 7 to 8. You're losing 50-60% on just because you may have checked stock twits during the 3-hour halt. Oh baby, this one's opening up at 7 and 8, and 9, 10. It's going to 15, and you may think your $6, $7 bid that you snagged or that. It's illegal for it to be this cheap. You got it. Well, you may have just got hurt real bad because halts down there. I mean, getting caught in between the halts is a tricky situation.
It's horrible, and I feel like I'm like playing back like an old nightmare. I used to get caught in those all the time when I was, like I said, I was only thinking about how much money I could make. And so there's a few strategies that I like to use, but the important thing is that this isn't going to work for everyone. In fact, it almost never works for a majority. And so you have to be reactive. The biggest thing with these halts is that you have to be reactive, and you also have to be patient, which, I know we're going to get a few comments that I'm contradicting myself, and I am, but that's because there is no one way to play these. If you play it one way, you will get screwed. Your account will get chopped. So one thing is that on a halt up is that you have to ideally before the halt, you've taken some off. You've cut your position by at least the investment. But if you get caught inside a halt with a full position, what I like to do is that the halt time is giving you an opportunity to put out some of your sells. So because some of these things that we see like that are 2 mil floats, if it has good news and it just starts halting up, okay, it can halt 6 times. I mean, why not? So what I like to do is that I take however much of my position that I want to take off. So let's call it the initial investment. I take the initial investment, or let's say that I have 1,000 shares. I want to take 500 off. I want to have 500 of sell orders ready. Okay, and this is where support and resistance comes in. Before resistance, I want to have some taken off, so that if it does halt down, at the very minimum, I've made at least some kind of money. But it is exciting when good news comes out and you're in on the low flow and it's just halting up, and you don't even have a chance to sell during the unhalt. So that's why I say
use those halt times to make your game plan, set your sell limits, et cetera, et cetera. But, also you have to be extremely, you have to manage that risk like crazy, because, there are times, I think, with the whole GameStop fiasco, it was halting up and down, and it halt up and everyone's like, oh, it's halting up again. And then it'd go down. And it's like, no one knew. That may just be a weird scenario, but there are times where you think it's halting up and it only halts up 50 cents and then goes down.
It's so crazy. Yeah. So, and then on the opposite side, if you're caught inside a down halt, you have to create a game plan. You have to identify support and resistance. You have to understand why it's halting down. So as Dan was saying, was that, he even at the end of the day on that PRPO, he would still have been up 150%, but he was swinging that. If he had bought at 9 a.m., he would be cut in half. So the important thing is that you have to understand, why is it halting down? Is it halting down because of bad news? And in that case, I would try and get out on any kind of bounce. If it's halting down because it's literally up 1,000%, then that's when you gotta. If it's sitting at support, then maybe you might get a nice bounce back. But that being said, the moral of the story is take some off, no matter what, because if not, these things can end horribly. And most of the time they do. End pretty bad.
Do you ever use level 2, like while it's halted? Sometimes you'll see like 500 bid at 950 on something that halted at 3, and you get all excited and ideas get in your head. Oh, it could be this. Do you use any of those that just flash up there, or do you just kind of take those with a grain of salt, take them for what it is?
Take them for a grain of salt. Take them for a grain of salt. Don't. If you're new and that excites you, you just take it off. Honestly, take level 2 off. Create your plan and then put level 2 back on. But if that unhalts and you don't have a plan, you're going to be a deer in headlights, and you're going to be selling when your plan would have said to maybe hold on, let's see what it does if it consolidates here, or you might be buying when your plan says no, this is when we get out. This bounce back is just a dead cat. This is not a going back, breaking out for highs. And the biggest thing is going to be controlling that FOMO. So if you have to walk away, let's just say that you sell just 90% of your stake and it keeps going and halting up, put in your last sell order and
take
walk
it off
away.
Your screen.
Yeah, take it off.
Nothing better. So I guess that kind of is a decent transition. I know ever since Zach said all he uses is level 2s. Not a big chart guy. I think it'd be 2 things to kind of talk about. One we reference a lot, or I think both we reference a lot, are level 2 and VWAP. Just kind of get a deeper dive on each of those. I have some people asking about them. So I guess we can kind of start off with level 2. I mean, everyone knows what it is. It's the buys and sells, and the bids and sell orders that are available for each stock. But obviously there are ways to use it. We've talked in the past about people flashing bids and flashing sells, being shorts, trying to scare people, or, just for other reasons. But I guess diving back in this market, you're seeing some of these plays that someone on Twitter may call. You're seeing these walls break. You're seeing these walls sometimes disappear. Is there any way you've been using level 2 differently now during this kind of shakier market, and especially now that you're day trading and not all swings?
Yeah, definitely. So part of it is going to be, using level 2 to your advantage to see, At that resistance point, is there walls up there to make it even more difficult? So again, a supply zone to make it even more difficult to get through that resistance point. That's really key. If I see that, then I'm going to be kind of paying more attention because, if you have a bunch of positions on, you're not actively looking at one stock if you have 6 different positions on because you'll get ruined. So if I look at the level 2 of like my 6 positions overall, and one of them is getting close to resistance, and I see on the level 2 that there's a pretty big supply zone there, then that's when I'll kind of bring that to the main screen and start to watch that one a little bit closer and monitor the others. That's one way. And then the other way is that a big bid. I think it was G-Nuts last week had a massive ask order. And so if you didn't have level 2 up, you would just think that if you didn't have level 2 up and volume, then you just wouldn't understand that there was a huge ask there. I mean, I think it was like 8-figure ask or something. And so at that point, that's when, it would hit there and then bounce off, hit there and bounce off, kind of barcode, as you were saying. And it's really important to see that, you could see on level 2 and on volume that it was breaking through that. And so if you have a huge ask and it's getting broken down, I mean, chances are the stock's going to pop pretty good once it's broken through because it comes down to simple supply and demand. A huge ask getting eaten through. I mean, that people want this stock.
Mm-hmm. So whenever, let's say you're day trading something, maybe it's just quicker volume, something, the China education sympathy on Friday. Even are you doing this on low float ones too, or only, normal stuff, normal floated ones? Because I mean, if I see like a 40,000 share bid of a $5 low float stock to 200 grand, and it's a sympathy play, I think someone's gonna try and run it up.
Yeah, definitely. So so I really try and stay away from anything underneath 10 or 20 mil float because that's when it doesn't matter what level 2 shows because I mean one big
can take it out.
Yeah, one flush candle will take it out, or in the same token, one market order will take that baby and halt it. And then it's like, okay, now what do you do? Now that's halted, it's only halted on one guy. It's not halted on news. It doesn't have any kind of reason for being up there. So I really just try and stay away from the smaller floats because of that reason, because there's no edge. There's no edge to that. As a trader, I'm always looking for some kind of edge, and the edge is not supposed to be, okay, this thing moves crazy. So
yeah, I guess like that's more of the same as kind of out the money options plays. The risk, the reward is big, the risk is big, but at the end of the day, it's what you're comfortable with. And if like we said, lower floats, I mean, it is one of those things that are so hard and easy to get addicted to, just because like if you're a newer trader and you get in a low float that goes like 400% in a week, you're going to be addicted and it's going to be hard to get off of them.
The worst thing that can happen to a newer trader is get lucky on the low float halting up. That's the worst thing. That's one of the worst things in my opinion. That just creates a terrible habit. That creates a mindset that is not.
Yeah, low floats and halt ups. Yeah, I mean you're playing with fire, but if that's what you do, that's what you do. So the very next thing, you talk about it all the time, the volume weighted average price, VWAP. Everyone's always saying this one's going for VWAP. It's going for a VWAP break. It may bounce off VWAP. Bring me back to VWAP. Why do people want it at VWAP? Why will it bounce off VWAP? And what is the significance of VWAP?
Yeah, so VWAP stands for volume weighted average price. And so it's funny because this year we've seen the algorithms get really smart. And what I mean by that is that people used to use VWAPs as their stop limit because the way that VWAP works is that it's, like I said, volume weighted average price. So based on the volume, that's what the average price was sold for on. And so the other cool thing about VWAP is that it doesn't change throughout the time, but throughout the time frames, which some indicators do. So no matter what, it's there. And that being said, what algorithms have been getting really good at, especially this year, is that knowing that everybody uses VWAP as their stop loss, they would flush it through VWAP, bring it just underneath VWAP, soak it, and then run it up. And so, they're expecting that to be everybody's sell, or everybody's stop loss. And then they're hoping that, when you see it only go down 2% underneath VWAP, and then
if
go
the
to
stop
new highs.
losses aren't there, that the people that would be the people outsmarting the algorithms, and they'd have to lower it more.
Exactly.
So with volume weighted average price, what does the if something has twice as much volume today as it did yesterday? Yesterday it was $2. Today it has news. It's at $2.50 on double volume. The VWAP higher, lower, how does that affect it?
So I mean, it's basically it is a formula, and so it's calculated by adding up the dollars traded for every transaction. So price multiplied by the number of shares traded, and then dividing the total shares traded. So obviously, if you have total shares traded, if it's higher or lower, that's going to affect it, because it comes down to a basic math equation, and that's why, because it's ever changing. It's an ever-changing scale. That's why so many people use it, because it's not just created taking the last 9 days, and that's what's really important, is that everybody uses it, which is so powerful, but yet can be really detrimental.
Yeah. One thing I always thought of. Sorry to interrupt right there.
No, yeah.
What would these indicators and charts, would they have the same power? Or obviously they wouldn't have the same power, but if everyone wasn't on them, are they technical? Or at this point, are they just indicators for people? Like, if everyone didn't know a triple bottom was extremely bullish, would a triple bottom still be extremely bullish?
Yeah, well, it comes down to is there an algorithm on it? One of the things that a lot of algorithms use is, or even something like something I like to use is called the TWAP. And so the TWAP, instead of the VWAP, it's called the TWAP. And so that basically sells. Think of it this way: is that if I have 1,000 shares, I can TWAP it to sell 100 shares every 15 minutes. So that, again, I'm not selling massive amount, I'm not selling a huge size,
so
but then I don't have to sit
for
there.
anyone listening, the T's time instead of volume.
Yeah.
So it's time weighted.
Yeah. And so I can sell, a pretty large position over a day, but I don't have to sit there and sell 50. So how you can use it how you can use it to your advantage is that if you see, because not only can you do time, but you can do something called a VWAP seller. And that means that, let's just say that the stock's underneath the VWAP. Every time that it comes close to the VWAP, you can program it to sell. So if there's a pretty big fund on, let's say, like $1 billion company, and they're trying to unwind their position, and you're like, wow, like this is the third time that it's going to come up and test VWAP. If it breaks here, it's over. Well, it's important to note that if you knew that there was a VWAP seller, you wouldn't be buying that. So that's where knowledge is power. Like, you don't know what you don't know. I think we saw a perfect example last week of the NFTs. I think it was HOFV. I mean, this thing couldn't break through VWAP for the life of it. And my personal opinion was that it was one of the days, I forget, I think it was like Wednesday or something. And one of my personal opinions was that there was a VWAP seller. So every time they came close to VWAP, boom, sell, boom, sell, boom, sell, refresh, sell.
So what ways do you in particular use VWAP aside from just being a VWAP seller? If it just keeps coming down to VWAP, how does it have so much significance in so many different ways? Why do you want to sell close to VWAP while others are wanting to buy it up at rise? Are you saying you're selling right before it crosses VWAP? Or because I know a lot of people are like, hey, once this passes VWAP, we got a runner.
Yeah. So that's that's one of the things that you hear most is that, okay, if it just gets through VWAP, it's gone. And then you'll see it get through VWAP and because it's that last little bit of buying pressure. And then, you just see massive sell orders. And that comes down to a few different things. But the way that you can really use it, and so we're going to go first from the short side and then from the long side. So from the short side, something that when you're shorting something is that you always want to keep VWAP in mind, because if the stock is significantly underneath VWAP, that means that, that it's what's the word I'm looking for? That it's probably oversold. And so if you see a stock go from $2 to $8 and it's now sitting at $6 and the VWAP's at like, let's 750 or something, I'm not shorting there because it's significantly underneath the VWAP and it has a pretty good chance of at least having some kind of bounce back up. Now, in the same token, from the long side, okay, I'm not going to buy something that is, let's call it 30% above VWAP, because that just means that that's not really the way that I kind of look at it, is that doesn't really show me conviction in buying. That shows me that someone is just buying, and it comes down to supply and demand, that someone's just buying no matter what. They want in. So that's not really bullish to me. I want to see ads and sells, or buys and sells. I want them to be close. But I want it to be near VWAP. And so anytime that I see something significantly above VWAP, I'm not touching it. Or if I'm shorting and I see something not even close to VWAP on the short side, and it's way underneath, that I won't touch that either. So I don't necessarily use it. Like a lot of people like to buy on VWAP, and I'll do that as well. But it's not one of my 3 strategies to where I'm saying like, okay, if this stock gets news, comes to VWAP, I'm buying. It's an indication. And it's a confirmation, but I really use it so that I don't screw myself by buying when it's 20% above VWAP or shorting when it's 20% below VWAP, the price I'm referring to.
And using VWAP is a good way to ensure that you're always kind of shaving some off the top. And at Pennies Going in Raw, we don't always like to just shave off the top. We like to shave off some of the bottom as well. And that's why this talk about VWAP is brought to you by Manscaped. Manscaped has, I don't know how to say it aside from your balls will thank you. You get the performance package. And if you use code PGIR, that will give you 20% off and free shipping on the performance package. And they come with the comfiest boxers. I'm wearing them right now. They come with the weed whacker, the ball trimmer. I won't tell you guys what it does. You can use your brain, but the preserver and the reviver are awesome. If it starts stinking down there, the reviver, just a quick squirt or two and you're back in business. But let me tell you, the preserver, have you had that on yet, Hugh? Have you got
I haven't. I haven't. Tell me about it.
That's a big mistake because I've done it. I told you about Walmart. I know it is just it has me looking weird because I'll be putting my hand in my pants and giving a quick whiff like all the time just because it smells so good. And if I had a girlfriend, I don't know how if she'd be trying to do the same, but all I know is it smells great. It feels great. Make sure to go to manscaped.com and use code PGIR for 20% off and free shipping.
Damn.
So
best damn working around.
Best
Dippity Dan.
Yeah. But I guess with VWAP, why everyone's always VWAP. Why VWAP as opposed to that? Is it just because everyone uses it because it uses the same time frame? Like, why is it more important than the 5-day MA or something?
Well, because I mean, those can be important and those are important. I personally like the 200-day and the 50, but with VWAP, I mean, it's the volume weighted average price. So you're literally like, there's nothing that affects it except the volume and the price. And so that's why it's so important, is that it's kind of like PE ratio
and the volume precedes price. Okay, it's all coming together.
Yeah. So it's kind of like talking about when we talked about PE and fundamentals, that that a PE ratio, you don't want to buy something with a PE ratio of, let's call it 1,000 for a long-term hold, because that'll probably see a pretty good pullback. Same thing with VWAP. If we're seeing something 20% above VWAP, chances are that again, unless it has stupid news, something like that, it's a low flow. But I'm talking in most cases, if you're looking at something and it's 20% above VWAP, that usually means that there's just a pretty big buyer in there, and that it should see a pullback. Where something like the 9 EMA or the SMA, that's not really gonna show. It's gonna show you an inflated price, but it's not gonna show you, is that relative price accurate. Where the VWAP shows you, okay, this isn't necessarily accurate to where it should be based on the different volume points.
All right. Well, that should settle us on VWAP and level 2. I'm pulling up my thing, getting us on. We can finish up with 2 more things. We have swings of the week.
Yeah.
Obviously not a swingers market per se.
No.
Maybe it's becoming one as stocks drop more and more and more.
Yeah.
Are you? I mean, I'm bringing it back because people wanted it back. People want to know, and we're men of the people. We're men of the people, not financial advisors of the people. But what are you swinging? Like my thing, like right now, it's hard. I'm a value investor now, hardcore. I think swinging has turned into value investing. My thing is, like, I'm looking at some of these Bitcoin or NFTs that may have shot up a ton and they're dropped, like AEHL. I think Ultra and a few others were on it, and it hit like 550 in the after hours, and it's back at 3. And I mean, that was one that I sold. I got nervous. I sold it, and I watched that thing piss missile in the after hours, and it stunk, man. It was one of my bigger, like, money on the table plays, and I think there's a lot of plays like this that are dropping a lot. Could be a lot higher, and were a lot higher earlier this week, and hopefully they will revisit their homes of $1 higher. But I think some of those are good.
Yeah, so it's funny that you mentioned kind of value investing, because that's kind of how I feel right now with the swings. So at this point, the only swing, first off, we're cash heavy, and the only swings that we have are swings that we see with significant value for the future. Now, I mean, obviously everybody knows that Vissel's my baby. Basically everything that I had gains in is back to average or back to my average or below my average. And so, of course we have Vissel, we have the WWR, I'm swinging RGLS, I'm swinging that Torch. But we did talk about Torch that 1 week, that, at this point it's just profit. We have the average of like 208, and that's going to be the way we're playing that one. And so we are kind of value investing at this point. If the stocks go nuts on some great news, then we'll trade around the core. But at this point, we're not really trading for a huge catalyst. I like the price of RGLS, and I'm not value investing in that. But as far as like Vissel, WWR go, that's something that I see for the future. Not for something like that has like a Marvel event, at the end of the month.
I brought a bad boy back. Fubo hit $20. Yeah, $20. Yeah. So I was like, I picked some up under 21, and hopefully that was the bottom.
Is that what everybody was talking about on Friday? I saw it come up on my timeline.
It was down
everywhere.
like 20%, I think, or another 10%. Yeah. It was down good, and it looked like, it's things like some of those swings that did really well initially are cheap again. You see CCIV, or I don't know if it's merged yet, and this one, or Fubo, and you're seeing a lot of these just super cheap compared to a few months ago, obviously. And what goes down must go back up, right?
Yeah. No, I mean, I'm gonna probably so the way that I kind of view swinging at this moment is that aside from those swings, is that if I start to see a sector starting to form, let's call it like Bitcoin. I tweeted today that this may be the pullback to the launch pad that Bitcoin needs to take that step higher to maybe test over 75. Now, that being said, if Bitcoin starts to break out, then I'll start to swing the Bitcoin plays that always go. But I'm not really catalyst swinging at the moment. The catalyst is the sector.
All right. Well, last thing we have today, we got a Stream Deck giveaway.
Let's go, baby.
So mine, I got some things on it. Y'all can't see.
Can I enter to win this? Is this can I do this?
Yeah, you probably won't win though. Just so we look better. On mine, I got Twitter, Fortnite, Golf with Friends, Discord, different Discord channels. Just one click, I'm there. Buy 1,000 shares, sell 1,000 shares, all real quick. Easy to set up. If I could set it up, so can you. And I got an extra one. And I wanted to give
what a
out
guy
to one of you beautiful listeners. And I've been trying to think about the best way to do it. I don't want to make it too hard on myself. So what I was thinking, you subscribe to the YouTube, you like the YouTube, you comment on Instagram, you like, and we're just going to scroll and we're going to see one. If you're one of our friends, you probably won't get it because then people will think we're scammers. But if you drop reviews, I'll probably pick some reviews, but I know a lot of you guys have already made reviews and you can screenshot those and tweet them at us, but say what you like about Pennies Going in Raw. Give us those 5 stars, subscribe and like on YouTube, and hopefully we'll be Stream Deck boys soon.
Isn't it crazy that we're almost at 3,000 reviews and we've kept our 5 stars? I mean,
pisses me off because there's all of these new podcasts that come on or they start and I'll just see them at number 1 on the business chart. And I'm like, how are they there? And it's one episode with 28,000 reviews and they're like giving away a car to someone that reviews. And I'm like, damn, dude, we just give shit away and run it up like that.
I mean, I'm not that nice of a guy. Yeah. I mean, I'm not that nice. I mean, if we're giving away a Tesla, I want a Tesla with it, put that in the contract, we get Teslas and we give away a Tesla.
Mm-hmm. It's like, we get to be excited with the listener that gets it too. It's like, yay.
We're all get revealed.
Yeah. It'll be a great day for all of us. It'll be like, okay, Dan, wow, Hugh, woo. And then it's like random listener. We're already driving away. All right, well, you can hit the outro. I know I kind of stole it with the
no, finish her out. You got the Stream Deck. Finish her out.
Yeah, but man. Any way you guys want to just show us love. If anything that will get our attention, I mean that's the way to do it. Instagram comments, YouTube comments, subscribe, like, and we're gonna pick one and we'll get it to you. And if you're just a listener and you're just commenting to be nice and I DM you, hey, congrats, what's your address? That just means you won and I'm not being creepy. So, appreciate it, guys. We love you and we'll see you on Wednesday with AJ Trades. See ya.